All right, Keith, I've pinned you as video, so that way everybody can talk. I know Abid is also online. So we've got Keith and Abid here. Morning, everybody. Scott Sternberg here from my home office. And so thrilled to have everybody online with us today. We are also live on Facebook. So if you're interested in watching this, you can certainly hop on Facebook. Keith and Abid, how about y'all introduce yourselves real quick to the viewing audience, and they're going to give a little presentation, and then we're taking questions right now on our Facebook page, and also a number of you have emailed me questions, so I'm going to ask the questions to Keith and Abid. So,
hi, I'm Keith Naccari. I head our transactional department at Sternberg, Naccari and White. My background's primarily in mergers and acquisitions and tax law. Though when the CARES Act came out, we dove right into it. There's a lot of interactions between the CARES Act and the Paycheck Protection Program and the tax benefits available and consequences. So it was a nice little fit.
Great. Okay, so let's go ahead and get started with the presentation. Keith, you want to share your screen?
Sure. Actually, we had this set up more as a discussion.
Okay, sure. All right,
Let
go
me
ahead.
jump in. This is primarily intended to be an update for the new interim final rules that came out determining how self-employed individuals would apply under the Paycheck Protection Program. When they're talking about self-employed individuals under this interim final rule, we're looking for individuals that are filing a Schedule C, so primarily for entities that have a single owner. In these instances, most of these individuals won't have been compensated or won't have been included in W-2 income on their payroll if they have clients at all. This is showing that individuals do not need to have employees to apply for a PPP loan. They can apply simply for their own lost wages, and it tells us how we're going to determine the amount and the forgivable amount. The amount of the loan, what we're going to do is we're going to go to your Schedule C, look at what the net profit was for 2019. Even if you haven't filed that Schedule C yet, we'll need to put it together. Once we get that net profit amount, we're going to look to add it either, if you have employees, we'll add it into the payroll under the $100,000 cap as if you were a W-2 employee. If you don't have employees, we'll simply take that number and essentially divide it by 12 to get a monthly average, and then multiply that number by 2.5. We do have our typical additions for health and retirement benefits included in that amount. Then when we go to look for the forgiveness amount, that monthly figure is basically your replacement income. And we'll take 2 months of that monthly figure, and that part's automatically forgiven. The remaining portion of the loan will go towards rent, utilities, or potentially mortgage interest if the business owns a building. And again, on the rent and mortgage interest, that's still subject to those obligations being entered into prior to February 15th of this year. So that's kind of a broad overview of what was discussed in the interim final rule. Another piece that they left kind of ambiguous, which has been a question that's been outstanding for a little while now, is what to do with partnership income. And I don't necessarily mean partnership income for someone who has an S election, but actually mean for an LLC with a partnership election. This is going to be your K1 reportings. It is still subject to self-employment tax. They did make it clear that the partnership income should be included with the company and not separately filed by each of the individual partners. They then failed to illustrate how that calculation would go, though. But they lead us to believe that the assumption will be we'll take the K1 income and use that similar to how we're using the Schedule C income for a sole proprietor or for a single member. But they didn't illustrate it. So the banks still have some hesitation there. And just so everybody's on the same page, the difference between LLC with partnership election versus an S Corp election is in an S Corp election, you're likely included in your W-2 payroll to some extent. And then the remaining distributions, you don't have that self-employment tax. Because of that, we don't believe that K1 income will be included, but we do believe on the for those with the partnership election, that K1 income will be included.
So Keith, if I've got a client who is let's talk about maybe ideal scenario and then get into maybe like, you know, some of the less ideal scenarios. So it sounds like based on what you're telling me, if I've got a client who's got a uses paychecks or some other payroll company, they're going to have they're going to have an easier time putting this together, right? In terms of being able to, or is it strictly based on just the profit sharing part?
So it depends. In cases where you have a Schedule C self-employed individual and they have employees, we're essentially going to take the information off of their Schedule C and then add it to their payroll information. We're going to treat them as an employee, but our source for the payroll amount, it's not necessarily the amount they received, but that net profit part, right? Their actual earnings on the year. If they don't have employees though, and aren't going to have those payroll reports, it actually becomes even simpler because we're just going to the Schedule C and we're using that net profit amount.
Okay. And then in that case, suppose somebody has done an S election, then how does that apply and what do they submit at that point?
Sure. So if they're doing an S election, they're likely not using a Schedule C. So they're likely outside of this realm. And in those cases, they're likely going to have W-2s for a portion of their income, and we would just go to more of the traditional model.
Gotcha. I'm hearing a bunch of, so I saw a news report today about how they're running out of funds and that, you know, and I know you and I had talked about it earlier. What are your thoughts on funding and how underfunded this program is and what's going to happen next?
Yeah, we're hoping there will be additional allocations and additional funding coming in the pipeline, though that seems to be stuck in Congress right now. The best advice I can give is make sure your applications are in as quickly as possible because this is going to be an underfunded program and there is no guarantee once the money runs out.
And based on what we're hearing, so, you know, you're hearing stories, you know, being reported that the PP program is run out or whatnot, but it's not like the funding has already been doled out already, right? It's based on projections, correct?
Sure. My understanding is that it's based on the projection due to the applications that are already in the pipeline, but haven't necessarily gone to funding yet. They believe, you know, we're coming up on that period where subsequent applications may not have funding available to them.
Okay.
So if people haven't applied yet, Keith, we shouldn't be concerned. I mean, we should be concerned, but we shouldn't be discouraged from applying is what you're saying, right?
For a few reasons. One, I believe there will be additional allocations made to the program. But two, it doesn't seem that the money's been, you know, doled out yet. Though I am strongly encouraging people to get their applications in as soon as possible because this is going to be a program that likely is not going to have enough funding for everyone.
Well, let's be clear. If you don't apply, you're not going to get anything, right? So,
right. You got to be in, you know.
Okay. Y'all ready for some questions from the audience? We've gotten a few in.
Sure.
This person is a sole proprietor, but runs everything through an LLC, and they want to know, should they file as the LLC or as a sole proprietor?
So likely they're going to file likely through the LLC, but if they're filing a Schedule C, they'll simply use the Schedule C to back up the information for the LLC. The bank will recognize that they're essentially a disregarded entity. And some of that will be preference of the bank, but from what I've been seeing, for the most part, they'll apply as an LLC, and then they'll use the individual Schedule C tax information for determining the amount of loan available to them and the amount of the forgiveness. And that's under the presumption that sounds like this is an individual without employees.
We've had a couple of questions relating to the PPP generally, and I know that they're very specific, so I don't want to get too specific and, be giving folks legal advice, but these are things to consider, right? We're not necessarily saying that this webinar is enough for you if you're making a PPP loan.
No,
correct?
this is intended to give enough information and know what's available, but we do strongly recommend getting guidance, whether that's through us or through another party. This program is a lot more complicated than it has been made out to be, especially on the forgiveness side, and getting good guidance and good guidance early is going to be critical, making sure businesses aren't left with crippling debt at the end of this with a very short term.
Hey Keith, we've talked a little bit about how certain clients have, and without obviously divulging too much, but what are some of the potential pitfalls? You talked to me a couple of days ago about a client who might have not been able to have up to 40% of their loan not forgiven, which might cause them to go out of business. I mean, I don't want to scare people too much, but let's talk through some of the complexities if they don't do this right.
Sure. So the largest pitfalls are in the loan reductions. Some of the loan reduction are in the loan reduction calculations. Most of these are based on your employees, right? And there are two ways that you can really step into a really big problem, and that is not bringing enough employees back that are, your full-time equivalents. So you could be misclassifying employees when you're counting. Or it could be bringing them back, but not at a high enough level. This is especially an issue when we're considering employees that are commission-based. And there's certain planning that has to go in place. It can be as simple as putting a draw against the commission during the forgiveness period that can save you from a tremendous offset at the end.
And what about for independent contractors or self-employed, entrepreneurs here? Like, what are some of the potential pitfalls?
Yeah, so one thing to understand, especially for individuals who don't have employees and are trying to figure out what the money can be spent on, you can't simply give yourself a pay raise and say, okay, now I've taken 100% of the loan proceeds. It all went to payroll because it went to me. That's not how this works. And that's kind of a small difference in how we could work with our employees versus ourselves. This owner compensation is going to be limited to that monthly calculation we did in the original determination. Whereas when we have employees, we're open to give them raises and still have it count under the payroll costs because there's no self-benefit there. Versus owner compensation, just claiming the entire loan amount as owner compensation is problematic because it's purely self-serving. So a portion of this is going to have to go into rent, utilities, or mortgage interest, or you're going to be left with some piece of a loan at the end of it. And that loan, if you're going to end up with an amount that's going to need to be paid back, people want to at least know to be able to budget to pay that back.
All right, so let's talk about just as an example with numbers, right?
Sure.
Let's say that you are a self-employed owner of a company, and let's just, for easy numbers, let's say that you figure out that your monthly average profit is $8,000 a month. So you're then going to be applying for 2.5 times that. So that would be,
so you'd have a $20,000 loan.
$20,000, right? Now you're saying that over the 8 weeks after you get funded with that loan, if you suddenly pay yourself the whole $20,000, then not the entire thing is going to be forgiven, correct? You have to spend the $4,000 on things like rent and utility and mortgage interest and those other items, right?
Correct. That's exactly correct. You're going to be limited to that basically 2-month average pay. So you're going to have 16,000 that's going to be limited to your forgiveness. You're going to have that remaining $4,000 balance that's going to have to go into the other trenches. This is where self-employed PPP loans are going to differ fairly greatly from regular ones, because in a regular one or with a self-employed individual that has employees, like we said earlier, additional compensation can go to the employees, and 100% of the forgivable amount could be in payroll.
Yeah. And I'll tell you that from my own perspective with talking to my clients, you know, some clients come back and say, well, okay, if the loan isn't forgiven, that's fine. It's cheap money and I could use it. Okay, great. But really, my concern is with clients who have taken the loan amount, allocated it, and spent it thinking they're going to get it forgiven. And
Sure.
Then on the back end, now they don't get it forgiven, and banks are the only arbiter of what gets forgiven or not. There is no appeals process. And now that's the nightmare scenario, that they've spent the money, can't pay it back. They have 2 years to pay it back, right? I mean,
the short term is really the main issue. Even though it's cheap money, it can be a significant cash flow hit. Because while it's a 2-year term, 6 of the months have deferred principal and interest. So it's really an 18-month turnaround. So for companies that, you know, do have employees and are going to have, you know, a $500,000-$600,000 loan, and then due to a reduction calculation, they spend the entire amount on forgivable expenses, but have this big reduction come in at the end. You know, even a $200,000 loan remaining could be over $10,000 a month in cash flow and lead to the collapse of the company, you know, a year from now, right? When we think we're out of the woods. And we don't want to take a great opportunity and turn it into the reason the company failed, right? It really is in contradiction to the purpose of the program, but there are those pitfalls that make it a possibility.
Hey, gentlemen, I have a quick question from a client that's on, and also a reminder to everyone to please send me your questions on the chat. There's a chat function for Zoom if you're on our Zoom, or if you're live on Facebook, you're welcome to put the question in the Facebook comments. And we will be putting this recording up later if you're not able to participate right now. We have a client that has an LLC with an S-Corp election, and that wants to know if the corporation's income or the salary that she takes is what is considered in one of these loans.
So while this hasn't been made tremendously clear, and this is one of the areas left with some ambiguity, in the case of an S election, we believe they're going to only take the W-2 income, so only our salary allocation. In that instance, will be included, and it'll simply be included in the payroll as a whole. And again, subject to the $100,000 cap that all payroll is subject to.
Another question came in, and the question is, can we amend an application after it's been made for, you know, based on this new interim final rule?
Possibly. It depends on which bank you're with, and yes, the application should be amended to properly reflect that information. You should be in contact with your banker, though, to work on that information.
Right. And it's so important to have a good relationship with your banker, right, Keith?
Very important. And, you know, a good example of where this could come into play is if you had somebody that, you know, was a Schedule C filer, but they had employees. So they went ahead, they filed the PPP application. They may have been told by their banker previously that they could only include their W-2 employees and didn't include themselves in that calculation. And in that case, yeah, there is potential for the application being updated and increased fairly significantly.
Great. I had a question about the interest percentage on payback. Isn't it like 2%? I mean, it's
1%.
1%. It's very low.
Again, it's not the interest that's the issue. It's the short term that's the issue. And also there is there's also limitations on spending, right? Like this is intended for payroll, rent, utilities, and mortgage interest. And it's not just that those are the forgivable tranches, but it's really supposed to be the use of funds. The use of you can't say, okay, I'm taking out a $600,000 loan. I'm going to take $200,000 and, you know, pay off part of my house, or, you know, take 50,000 and put in a swimming pool. That would be improper use of the funding, and,
Right.
you know, be in violation of the loan itself. So
Sounds like a great way to get audited and go to federal prison.
yes.
Although we're not criminal lawyers.
Right.
I had a question that just came in about how does a single member LLC or a flow through entity, like maybe even a Schedule C entity, show that the SBA loan was used for payroll when they don't have payroll?
Yeah. So if we have a Schedule C filer, they are presuming that your monthly replacement is forgiven, right? So when we're going to that net profit amount, and then we divide that by 12, we're going to get your monthly replacement income. And 2 times that is going to be presumed your forgivable amount as your payroll, right? So that's simply going to be calculation driven. The remaining piece, so we're multiplying by 2.5. So that remaining 0.5, we're going to have to use in our other categories. And those are really going to be the only ones that are going to have to be proven outside of showing the cash being distributed to yourself.
Great. Abid, any issues you think we missed that people might want to know about independent contractors and self-employed applying for PPP? Should people be applying for these with incomplete information just so they can get in line? What do you think, Abid?
Yeah, I think you should put in your application as soon as possible. I know that, you know, a lot of my clients, they bank with bigger banks such as Chase, or, you know, I've got one client who put in their application through Resource Bank, and they are partnering up with Cabbage. So Cabbage is a national lender. I think you got to get in your application in right away with whatever you've got, so that you're in line. I think that the biggest issue, I think we covered a lot of stuff today. I think the biggest issue for everybody listening on this is that you've got to think about getting the application in, and then you've got to think about, you know, once the funds come in, how you're spending and how you're documenting that spend. And if you have any issues or questions about that, please come talk to us, because I really think that that's where some of these pitfalls are going to be. You know, this is not money without strings. And so I think it's important that we know what those strings are and how to best take advantage of them for your situation.
I guess the
Going back,
being involved on the front end really matters, right, Keith?
Correct. Planning is going to be essential here. And going back to the question concerning the application, while it's important to get it in timely, all of the information does need to be accurate. A good example of this is, again, if you haven't filed your Schedule C for 2019, but you're required to show a Schedule C for 2019, you can create a Schedule C for 2019, even if it hasn't been filed yet, but that document that you create should be accurate to your books and should be what you're anticipating filing. Any updates to any application information should be updated to your bank prior to the closing of the loan. And that's important just because we want to be transparent with our lenders and with the SBA. But yes, once we get the loan, and even right before we get the loan, planning and budgeting on the spend and making sure it's forgivable, and making sure we've gone through these reduction calculations ahead of time for anticipated reductions is important. You know, whether the full amount is forgiven or not, and whether you want to take excess that won't be forgiven, is a business decision, and is one that only a business owner can make. You know, a legal advisor or an accounting advisor should not be making those decisions, but they should be providing you with the information you need to know what the consequences of those decisions are. And the consequences and the direction of your company, that's your decision, right? That should never be ours. But you do want to make sure you have good help so you know what the consequences of those decisions are.
How about how the program will apply to people who are on commission, like realtors or you know, brokers?
So we have two sides that we really have to look at there. From the individual. So if the individual has no employees and is commissioned and, again, is filing that Schedule C, we're going to have a presumption that it's replacement income, and we don't have to show them actually making that income during the forgiveness period, right? So that, again, goes back to, we figure out what the monthly average was from last year's net profits off the Schedule C. We multiply that by 2.5 to get our total loan value, but we multiply that by 2 to get our forgivable amount for the replacement income. And then that remaining 0.5 we just have to spend on forgivable expenses. But in the case of a realtor that may not have employees, yeah, that portion is irrelevant of what you have coming in. If you have employees that are commission driven, you may need to consider certain draws against the commission or certain guaranteed payments during the forgiveness period. Because for employees, we don't have that assumption that it's replacement income for them, right? It's what actually is paid to them. And that's why individuals with commissioned employees, it's especially important for them to be doing some planning prior to the loan coming in, as opposed to at week 7 or 8 when it's going to be really late and really difficult to make up any loss.
And what if somebody works at home, like we're talking about these commission folks, does that count as rent for their office?
Again, that's going to be really difficult to push through. It's going to be based on what you previously reported, and it's also going to be based on documentation. Have you been renting to your entity, things along those lines.
Okay. Any final thoughts, Abid?
No, I'm good. There looks like there was one other question, Scott, on the chat.
Yeah, it's
I'm
about
typing as fast as I can.
Well, go ahead and ask, Michelle.
Okay,
Let's hear from
so
you.
I am a tour guide that works out of my home and has an LLC and no employees. And as I fill out the application, it's constantly asking me about payroll and whatnot. And I don't pay myself as payroll. I just take in the money as the company. Do I essentially, when they ask those questions, ignore anything that asks, like put 0 for payroll expenses?
Yeah. So Michelle, I'm assuming you file a Schedule C on your tax return? Okay.
Mm-hmm.
So what we would do is we would take your net income, your net profit from your 2019 Schedule C. We would divide that by 12. And that would essentially be your monthly payroll. Okay. If you have no other employees, because that is basically your replacement funds, right? So you may not make it in this particular period and you may not pay yourself on a regular basis, but they're saying if we average this out, this is effectively your payroll.
Got it. Thank you so much for clarifying. And then the last part of it was that I rent my apartment and use part of my apartment as an office, which counts, for taxes. Is that essentially I can put that percentage of my apartment's office use towards that part of my rent?
Possibly. That's going to depend on which bank you're going through and the documentation.
And that's probably something you should ask your lawyer, your banker, your accountant, because we don't know how your particular tax situation works. It looks like we have one more question before we go off. Schmidt?
Yes. I am a liquidator of an LLC. It's not going into dissolution at this point in time. It was really a discrepancy between a husband and wife getting divorced situation, but I've served in that capacity since 2018, been compensated throughout. I'm not an employee as such, but I'm the primary actor or agent of the company. I'm the only one that really has authority to act for it. Would the fees that are paid to the liquidator be recoverable under the PPP?
Likely not through the company. So I'm assuming those fees are 1099. Those fees aren't paid to you as a W-2 employee?
No, not W-2.
Okay, so they're probably 1099 to you. They're not recoverable through the company. However, you or whatever entity is receiving that 1099 work if you were a sole proprietor, or if it's going through a single member LLC, you could potentially have a PPP loan in connection with those payments.
But it would depend on your particular tax situation.
It would very much depend on the structure. So the answer is the company likely doesn't have a loan, but you or whatever entity being paid could potentially.
And that's why it's so important to have professionals assisting you with this, whether it's a lawyer, accountant, or both. You know, a lot of people are thinking this is just, okay, I go apply and then, you know, I'll get it forgiven. It's going to be way more complicated than that. Right, Keith? Just to close us out here.
Yeah, especially in those situations. I mean, you have some people where it's going to be fairly straightforward. You know, they haven't had fluctuations in their employee levels. They have, you know, very basic, very straightforward expenses that are going to be paid. That's not going to be the case in most people. And considering those elements and how they're going to end up in a reduction is important now, because there's some fairly simple steps to sidestep those reductions if they're taken early.
Well, everybody, I want to thank everybody for coming. We are recording this and are going to put it on our website shortly. Again, www.SNW.LAW. And Keith and Abid are kind of heading up our PPP response unit, and we are working on COVID-19 issues from employment to business interruption litigation, all throughout this time where we're all sheltering at home. You see my little home office kids room, Abid in his living room, and Keith in what appears to be a closet or a basement or something. We're gonna have to get Keith some art, but we hope everybody is happy as you can be, healthy and safe, and that you and yours are well. And just keep tuning in to SNW.LAW and like and share our Facebook page. Give us a ring if you need help. Thanks, everybody.